in Savannah, the city by the sea. Oh, okay. The city by the sea. And I am a native here. I love living here. I service a primarily Black clientele, mostly Black business owners who have achieved at least a net profit of 6 figures. We are booming here in Savannah. We love to do business with each other, and I love to do what I can, not only for my business owners, but for the community at large. I do a lot of presentations like this to educate business owners on how to properly set up their businesses and to make sure that they're setting themselves up for future success and growth. That's it.
Hello, good afternoon or morning. My name is Melody Morton, and I am the owner of Brown and Morton Tax Associates. We are a bookkeeping, we do CFO type services, and we provide clients with structure. We love to work with small business owners. That's our primary group. I am based in Birmingham, Alabama. I'm a native of Birmingham. I've lived and moved away, but I'm back home. I've been back for a while. So and I've been in this business officially since 2012. So I look forward to doing the presentation. I hope we can give you guys some good information.
All right, awesome. Okay, so we're gonna just go ahead and get started. We're gonna start off with the oldest business structure, the most easy business structure that a person can establish. Hold on, somebody else is coming in. Just so I don't have to repeat myself, I'll let him or her come in. Okay, looks like they're here. All right, cool beans. So a sole proprietorship is the easiest business structure that you can have. You basically can just start doing business today as a sole proprietor. You do not need a employer identification number. You are the business. Your personal assets will be at risk. You file a Schedule C with your 1040, which is your personal income tax return. The Schedule C represents your business return. You can take money out of your business without a W-2 because you are the business. There's no difference. However, you should keep a separate business account in case there's an audit. So I can tell you that as a former auditor for the IRS, I would ask, one of the questions during an audit is, do you have a separate business banking account? If you don't have a separate business banking account, that creates problems because let's say the IRS finds out that you have unreported income. You may try to convince me that your family member gave you that money, but I'm like, I'm looking at it right here. You received an extra 10,000 and we also have a 1099 for you. Like it has to make sense. And so that's why you want to have a separate business account. So when I first started, I have a separate business account. You get your EIN letter and you take that to the bank and then you set up the business account. It really is like a 2, 3, or 4 hour process at the bank. And that's happened since 9/11. That's made it a longer process because they ask you a gazillion questions when they're setting up your business account. But when someone pays me, it goes straight to my business account. It's not a question of where did that money come from. That money came from a business transaction. It was deposited by Square. I can show you where the person paid me X amount of dollars for this service, and then boom, there was that deposit. That is how a business account works versus I all of a sudden have $10,000 in this account and now I can't account for it. The IRS can't ask you for your business bank accounts. They can summons your bank statements and they can ask you about the income. That can be a true audit issue. So you want to make sure that you set up a separate business account where you're only doing business, where only business income is coming in and business income is going out. You want to make sure that you report your business income properly because if you don't, You're now cheating your future out of Social Security and Medicare. I'll say that again. You want to make sure that you are reporting your business income accurately, because you can be cheating yourself out of your Social Security and your Medicare income. Like for your Medicare taxes, make sure that you report the income properly. If you need to tax plan so that you have less taxable income, okay, we can talk about that, but don't cheat yourself. Tax planning and tax evasion are two different things. Tax evasion is illegal. Tax planning is just fine. Okay? And again, you can operate as a sole proprietor legally. You don't have to have an employer identification number. But let's say you're in an industry where you're required to share your social security number with vendors. Then for you, you definitely want to make sure you have an employer identification number, because you don't want half of the world to have your social security number. Okay? You don't care if they have the air quote social security number, aka employer identification number for your business, but you don't want them to have your personal social security number. Fraud is real, theft is real, you name it, it's real. People are not always truthful and people are not always honest. So again, you can set up a sole proprietor and not be an LLC, and that's a legit business. There's no additional fee for that. You pay a little more with your income tax prep, but it's also included with your personal income tax return. Monisha, Miss Melody, any questions? Anything you ladies would like to add?
I want to hone back in on that Social Security, and I'm sorry if I'm cutting in and out. I had to move rooms, but if you can still hear me, let me know.
We hear you
Okay,
just fine.
but perfect. The Social Security and Medicare tax part, I'll let you know personally. My grandparents owned a hair salon for over 30 years. And the way that it was reported, my grandmother was not getting her fair share of Social Security and Medicare taxes reported. And they actually did not report all of their income as they should, because if you're familiar with older businesses, they're not really trustful of the government. And so when it was time for them to draw their Social Security, I can tell you right now, my grandmother only gets about $680 a month, and my grandfather only gets $720 a month. Who can live off of that amount of income on a monthly basis? There's just absolutely no way. So you want to make sure that you're being truthful. And if you need to tax plan, please do. That is so important, because you don't want to have your plan for the future be that your kids take care of you, because that's not a solid plan.
Exactly. I think the most important thing is having a separate business account. That is one of the things that I always tell anybody that I'm working with that is starting a business. Please get a separate business account. Please don't have things that are not business related coming out of that business account, but keep your books separate and keep your accounts separate and clean. So I think that's the most important thing that I always tell people.
You mean I can't commingle my funds?
Please don't. Please, please.
But I mean, it's only a
No.
$5 purchase. Like, I'm only running to Walmart to grab some stockings for church.
No, no, no. Please don't.
Okay, thanks. I'll try not to do that. Okay, so right now we're gonna go ahead and open it up to our to our audience. Does anyone have a question about being a sole proprietorship? You can unmute yourself and say your name and then ask your question.
Good afternoon. This is Nichelle. My question is, how do you make a sole proprietorship in LLC? And I hope I'm asking it correctly. As I know you said that there's a difference, like one is a legal structure and one is for tax.
Yes, And so technically your question is an LLC question, and we're going to address that a little later.
So you would essentially be no longer a sole proprietorship.
Not
Okay,
true.
I'll,
Not true.
no,
We'll
that's
get
what
to
I'm
that.
asking.
Yeah,
Okay,
no, you're still a sole proprietorship, but we'll get to it. They're not the same though.
okay,
We got you, I promise.
thank you.
You're welcome. Any other questions before we move on from a sole proprietor? And when we are going over the LLC, I promise you all, we will let you know who can be a LLC and how that affects the actual tax structures. Okay, so no one. All right, let's move on to the next slide. Ta-da! Nichelle, we got you. The next slide is limited liability companies. Yay! All right, Miss Melody or Miss Monisha, I do not remember who was going to go over that. So go ahead and have your way. I'm going to mute.
I think we can both tackle it. So feel free to jump in because I know I have a talking spirit. But LLCs basically they're limited liability companies, and they're legally structured at the state level. And so you can either have them as sole proprietorships, Nichelle, you can have them as partnerships, or you can legally structure them for your S corporation. But they don't have any bearings on your tax entity classification. So when you apply for your EIN, there'll still be a question in that whole questionnaire survey to register for your EIN that says, will you be registering as an LLC? And it says you must have LLC in the name. And then from there, it says, are you going to operate as a sole proprietorship or a partnership or some other entity that's not a C corporation? And so you still have to choose which one of those entities you're going to operate as under the LLC, because it is a disregarded entity by the IRS. And so LLCs themselves, they're not corporations. And so they can't go public, meaning that like a C corporation where you buy shares, and we're all familiar with Robinhood and how we buy shares of Amazon and we buy shares of whatever stock is hot right now. LLCs don't have the ability to do that. And then they're limited by the amount of your investment in the LLC, which basically means that your contributions to the LLC are your basis in the LLC. So we call this more like shareholder contributions, or for the Schedule C for the sole proprietor side, owners contributions, where you may be working a job and you got some money that you now want to start this business venture. You got your family who believes in you, and now they're contributing funds to your startup costs. These are contributions, and that is the basis of your LLC. As always, you always want to keep a separate bank account for your business versus your personal, because once again, as Renee said, when it comes to those IRS audits, it can get very intensive. And if you haven't been monitoring your expenses, then it gets really convoluted, and commingling funds is such a headache, not only for your taxes, but also for your accountant when we're getting ready to do your financial statements. And if you've just been spending more money than what is really necessary, we look at that as a bad practice, because that also cuts into your ability to keep cash on hand as a business. So you want to always separate your business from your personal, but also monitor your spending as well. Tax preparation fees will vary based on the structure of your LLC. So a sole prop LLC is not going to be the same as a partnership LLC. It's not going to be the same as a 1120 S Corp LLC, because all of those require different tax forms and different tax calculations. So you want to be mindful of that. It's not going to be the same just because you got it labeled as an LLC. Melindy, please feel free to jump in because I'm just on a roll over here.
You are doing so well. I love it. I think it's just the whole thing. It's the setting it up appropriately, making sure that you again, we're gonna hammer this to death. Separate business accounts. Watch how you use your funds. Watch how you move your funds. Make sure that things are very, very clear. And just being very, very diligent about not commingling. That's my number one don't do.
Yes. And then with the LLCs, I hear a lot, and I see it a lot on social media that, oh, I have an LLC. So, if nobody can come get me for what more than the LLC is worth. And I have to tell you all that that is far from the truth. A lot of times people set up LLCs and have absolutely no insurance. And so if you are the registered owner of that LLC, you are still liable if depending on the type of lawsuit and depending on the amount of damages awarded to the claimant. So don't think that that LLC is going to completely shield you. That could be far from the truth. So if you're going to establish an LLC, even if you don't establish an LLC, whatever business structure you establish, please get insurance for your business. Liability insurance. If you're a contractor, you get workers' comp insurance, general liability insurance, all of that. Get whatever insurance. I have professional liability insurance. I'm sure my other colleagues on this call have professional insurance, which means that because of the level of services that we do, everything is not exact. And so things may not go the way that we plan for it, and that could fall back on us. And so as a client, you have a right, to pursue legal action against us. And we have to have insurance. So a lot of times we run anything that we need to do that seems a little out of left field. We run it by our insurance companies before we can proceed with you as a client, because that covers us. And you want to make sure that anyone you work with also has insurance, and you have insurance to cover yourself. So liability insurance, liability insurance, liability insurance. I'm sure you can find anyone on the corner. State Farm, they have higher rates, but anyone that you can just call, hey, I'm getting ready to open this business. Can you tell me, based on my industry, what are some suggested companies and what are some rates? So, and then the state filing fees, because you file for your LLC at the state level, and every state has different rules and regulations regarding their LLCs. In Georgia, we're really lax. You file an LLC, you pay the $150 a year, and you call it a day. I'm sure Renee has a completely different story about how California operates LLC.
Listen.
Alabama's the same. You send them the check and you're good if you have an LLC. But yes, I've lived in states where it's a lot more too, but you got to make sure you stay on top of that stuff.
Yes.
Ooh, child. Yes. Okay. So here I can tell y'all, and I realized earlier, like I never told people like where I live. So I'm in California, beautiful California, where we pay for the sunshine. In Jesus' name, amen. So I'm here in Cali, and so I have an LLC, a limited liability company, for my tax company, which is also a sole proprietor, which I'm really mad that I'm a sole proprietor because I've made so much money. And so I personally will be switching to an S corporation because my taxes are ridiculous. But I didn't want to switch before I actually had a profit, right? Like I wanted to make sure that I had a viable business because I don't want to become an S corporation. And now I can't do certain things that the tax law requires me to do. So I definitely can pay myself a reasonable wage. So now I can, comply with the other requirements of being an S corporation, which we'll get into later. But when it comes to limited liability companies for California, we have a minimum. People always talk about it's $800. It's $800. No. That's the minimum fee to be a limited liability company in California. The minimum fee is $800 to be an LLC. So we start off straight out the gate paying $800. Then there's different other time frames that we have to do. We also have to file the form annually. to be the LLC. So yes, our requirements here in California are completely different than anywhere else. But do what you got to do. So when I see the post on social media about becoming LLC, I'm like, oh my gosh, here they go. There's so many levels to being an LLC. And I'll be the first one to say, when I started my company, I honestly was just a regular sole proprietor. Last year, I became a limited liability company. For me personally, understanding taxes, I wanted to make sure that I graduated and hit certain peaks before I went to the next level, because I understood that at the next level were additional expenses. Hello, somebody, additional expenses. And yes, I could write them off, but I wanted to make sure that I could afford those additional expenses. I didn't know I would be successful, so I didn't want to create huge bills for myself. I wanted to make sure I could afford them. So now the bills come, and we ain't got no problem paying them, but I didn't want to do that prematurely. Okay, so we will now
I
open
think
it up.
Michelle has her hand
Yep,
raised.
I was gonna say we're ready to open it up for questions. Mission Michelle, go. We listening.
Thank you. A question that I have, if you start off as a sole proprietor and you get your EIN and you open your bank account, does your bank or your bank account have to change if you then, like you kind of migrated
No,
to LLC?
no,
So, okay.
no. The answer is no. Before you get it out, we hear what you ask and what you formulate. No, it's still your business. So when you become an LLC, your EIN number is assigned to you from the Internal Revenue Service. It's not assigned to you from your state. So when you add that legal liability portion to your business, you don't have to change anything. That number, the only way you would have to change your bank account would be if your employer identification number changed, because that's what's attached to your bank account. So if you're not getting a new number from the IRS, your bank account is good.
Follow-up question. If you move to a different state, does that EIN have to change? And so
The EIN doesn't have to change. I thought you were going to say, do you need to register in that state?
so that was going to be part of it. Like, how much has to change if you, because I was just having this conversation with a friend of mine who lives in PA and she wants to move. So that was the thought process. If she leaves PA and moves back to New York, or moves back to Atlanta, what's going to happen with her LLC? So that's why I was wondering, like, how many things have to change if you do decide to move out of state?
So LLCs are at the state level. You want to close that down with the state so that way they know you don't have any more compliance requirements with them, and then you will open up in the new state. And I'm not familiar, Melinda, you could jump in, but I'm not familiar with any transfer of LLCs from state to state. You would have to close down one and then you open up the new one.
Yeah, I've never heard of that. I almost opened, when I lived in Massachusetts, I almost started an LLC, but I waited until I got back to Alabama because I figured I was going to move, and I didn't do it because of that. Because Massachusetts is also a real taxi state too, like California.
Are you able to keep your business name when you close down, or is it kind of like up for grabs? Because I'm assuming there is when you close down an LLC, I don't know how quickly you're then able to open. So let's say you close it down right before you move out of that state, you move to the new state. Is there a time frame that you have to wait before you can, register in that new state? And is your company name, is it still yours, or is there a chance that someone else could grab it?
So I think what you're trying to say is the name reservation, and that is something that you want to look at the state level. But for your situation specifically, or for your friend's situation specifically, have them contact one of us. Have them book a consultation with one of us so we can guide them on the right path, because it sounds like there are some other complexities that need to be worked out, more so than in a question and answer series, and to make sure that they're set up correctly.
Oh no, this is just my brain thinking of like what is, because LLCs, I'm gonna be honest, this is it creates a little bit of anxiety for me because of the people talk about it so vaguely, and it's just like there's so many things I feel like that are tied to it. And honestly, that's why I never even went in that direction, because I didn't understand it. And to Kay Renee's point, people talk about it and that they don't always give accurate information. So I was happy that you guys are doing this, because it's just like I really don't have much information on it, but it would be something that, you know, I would like to make a goal. I didn't know if I was a good fit for it. So these
So
are just
it,
There's,
questions.
there's a
so,
lot of misinformation out there that floats around, and I
mhm.
swear, I just, sometimes my head wants to spin around like, that's not how it works. That's not how any of this works. And I think, you know, just having somebody that you can talk to and kind of talk it through is probably a good idea before you jump in, especially if you're thinking about moving. Like I said, for example, I lived in Massachusetts before I moved back to Alabama, and I looked at it and I was like, yeah, now is not the right time. So it's really getting somebody to kind of help talk you through it so that you don't get caught up in all the, just start an LLC, Twitter and TikTok and all those
Start an
BS. And you
LLC, put
don't,
it in your kid's name, pay your
yeah,
kids,
hey,
all
put
the
it in your
stuff.
kids, write your kids off and all that stuff. It's so much misinformation. And, that's why I'm glad that we're doing this today, to at least get people on the right path.
Yes. So this right here, this is just like to provide you general information. If you have specific questions that are like, like you said, like Nichelle said, like she has all these questions, right? So you can schedule consultation so that you can get your questions answered more directly, more precisely, via a consultation if you have more, in-depth questions. This shouldn't take us more than an hour. This is just us taking an hour to provide you with some information to help get people on the right track. So you can book a consultation with any of the three of us, whoever you feel comfortable speaking with, to help get you started on the right path so that you can officially set up your business structure, as a legal entity, also as a tax structure. Let's go ahead and move on to the next slide. S corporations. S corporations, they're special elections, so you don't automatically have an S corporation. When you file for a corporation, you're automatically a C corporation. So if you want to be treated as an S corporation, you have to make that election. And I'm not sure which person is going to take that over, but I just wanted to give that little so just in steps of business, right? So these slides are created. Maybe you know what? Maybe we should do a regular C corporation first and then go back to S corporation. Because basically, I want to present the information to you in the orders of business establishments per the IRS. So right now, the IRS is the IRS. It doesn't matter if you're in Kentucky, if you're in California, if you're in Idaho, if you're in Utah. The IRS is the IRS. When the IRS assigns you an EIN number, that is your EIN number, period. It doesn't matter where you are. You don't have to shut it down unless you sell the business, unless you close the business. Um, and some people sell the business and they sell the EIN numbers with them. So that, again, that depends on how you want to do it. But your EIN number, like on a federal level, a federal taxes are federal taxes. It doesn't change per your location. That's the beauty of the IRS. It doesn't. That's why we can help clients all over the country, because the IRS is the IRS. Your states are what have like the intricate different details that we don't know about. Like, I don't know, I don't have a client in Utah. When you start asking us certain stuff, we may say, I don't know, because that's on your state level. But when it comes, so, and remember, LLCs, those are your state level. So they vary. Remember, I said California, we start off $800 for LLC. Monisha said her state start off at $150. Miss Melindy said that her state starts off at 150. Like they're different. But again, California over here with 800. Why California expensive? Again, I told y'all we pay for the sunshine in Jesus' name. So there you go. It's $800 if you want to be an LLC. It is what it is. So we're going to start. So again, just to recap right quick. So business structures start off as sole proprietor. That sole proprietor can become an LLC. There's a C corporation. Okay. Remember that these are the three. And then after that, you can become an S corporation. That's a special election. You can be a 1120S LLC. That is possible too. So here we go. C corporation. One of you ladies take it.
All right, so let's talk about corporations. Like Kay Renee said, to start a corporation, you have to file articles of incorporation. There's lots of steps that are built into what you need to do. There's things you have to present as a part of that articles of incorporation. You will need a business license. You are going to need an EIN. This is for some sort of a bigger structure. With a corporation, you have shareholders. With a C corp, which is the standard, you can have more than 100 shareholders. So there can be, like, we all own Amazon if we buy Amazon stock. We all own whatever, Tesla or whatever you're buying. You need all those things in place to get it set up. You can have different types of stock. You can have people that are shareholders for your corporation that don't reside in the United States. And it's just a very open type structure that anybody that can get into it can invest in your corporation. If you are a corporation, your tax prep is going to be not cheap. So just be prepared. Not cheap is a nice way to say it. With the corporation, you will have to file the 1120 form. And if there's people involved in the corporation that are employees, they will also have to file separate tax returns. So if you're doing all that together, it's going to be a more expensive business venture. So that's kind of corporations, kind of an overview. There's lots of other things, like you have to, like I said, you have to make sure you get all the different things that are needed to set up that corporation and have that with your application. So it's a more extensive process to start a C corp or any corporation. Anybody else you guys want to add anything to that? It's kind of straightforward.
I would add that that's normally a step that you take when you start making significant money. Like, you don't start out your business as a C corp because
Right.
if you're making only $5,000 a year in profits, like, don't set yourself up to fail so early in your business. You want to
Right.
make sure, like Kay Renee said earlier, there are steps in your business entity structure, and you want to start out with the simplest. And as you continue to make money, you want to continue to put these steps in place, like Melindy said, so that way you're covering yourself. That way you're setting yourself up for success in your business. And whichever direction you choose to take with your business, if you want to leave a legacy and then, you pass it along to your children or other descendants, if you want to eventually sell the business, that you have already taken all those steps from the beginning till that point to set up your business correctly. So don't start out big if your money doesn't justify.
Yeah, exactly. I've got
And
a
let's
client
also add too, you as the business owner of a C corporation, you're an employee. So just one expense that people don't think about, like when they're thinking about their business structures, like, guess what? You now have to pay employee taxes. Like, you have to pay for payroll out of this. So starting off too big, too fast can make you go under if you don't have the income coming into your business, right? And so again, for me personally, that was very important to me. I understood that, different tax structures came with additional expenses. So if you don't have the money, then that means, and let's say you quit your job and all you have is your business. I'm not knocking anybody that did it. I just was too scared to do it. But if that's the way that you went, and now you have to pay for payroll, but you don't even have income, but had you just remained a sole proprietor, that expense wouldn't even be an issue. It wouldn't be an issue at all. So knowledge is power. And I hope that you're feeling empowered because we're dropping knowledge for real.
Yes. And Kay Renee, I have a client who followed your path exactly. She's been in business since 1999 and became an S Corp in 2014. And now she's actually making the money. But if you do too much too soon, you're gonna have a whole lot of problems.
Exactly. Businesses fail because they grow too fast. That's one reason they fail. Again, like I've told y'all, like on Facebook, I'm just now doing ads. I'm just now paying for that. Like I wanted to make sure I had a business. I've hit 6 figures a few times now. So I'm like, all right, now I can scale my business to more of the public. So I'm doing the flyers in the mail. But had I had 1,000 people coming at me initially, let me tell you, Kay Renee would have been overwhelmed and shut down its business, and ain't nobody tax problem about to get solved. You hear me? Y'all are stressing me out.
Mm-hmm.
So you gotta do it right. Some people, they businesses grow too fast and they can't meet the demand. They have the clients, but they couldn't do all the work, so they fail. There's some people, they say, okay, I'm gonna be a corporation out the gate. Okay, that's fine, but why got to be out the gate? Why can't you grow to that level? Right? Like we don't come out of our parents' womb with PhDs, with degrees. We don't come out walking and talking. We start off on milk. It's okay to start off slow. It doesn't mean that you don't have big dreams. There's levels, and it's okay. I don't want
Exactly.
anybody's business to fail. All right.
Go slow to go fast.
Exactly. So, open it up to the audience. Does anyone have questions about being a C corporation? Just a traditional C corporation, no special election, just a regular C corporation. Okay, cool beans. No questions? All right. So then we'll move on to the next slide. So we're going to go back to an S corporation. And so the S corporation, this is where we talk about like you have to make a special election. So normally an S corporation, like it's a flow through entity. So that means this still affects your personal income tax return, but you're also now an employee. And one of the main points that most people miss about this step, yes, I said it with an attitude. I meant it. People do not pay themselves a reasonable salary. That right there alone is drama. Y'all seen the TikTok? Am I the drama? Yes, you are. It's you, boo. You the drama. You the drama with your S corporation not paying yourself a reasonable salary. So one of the requirements that I want people to not miss is you must pay yourself a reasonable salary. If you are a plumber, and I'm like, this is a real life experience that I spoke to somebody about. A plumbing company making over 6 figures, and they're paying themselves $5,000.
No, ma'am. No,
For the
ma'am.
year?
For the
5,000 for the
year.
year?
For the
No,
year. You hear
no,
me?
ma'am.
You hear me?
No, sir.
And then you meet me, Miss Kay Renee, and I'm like, I understand you've been going to Sue for 10 years. Sue been doing your taxes wrong for 10 years. That's why she only charged you $500 to do your S corporation return. First of all, your S corporation return should not be $500 if it's being prepared accurately. Okay, that's just the truth. But basically, they were like, well, this how much we make. No, that's not how much you made. Like, let's just be honest. You wouldn't work at Walmart for 365 days and only bring home $5,000. That's not a reasonable salary. Even Walmart has a minimum wage that they have to pay. So as auditors, I'm a former auditor for the IRS, but as auditors, Like when we're looking at certain things, like I can look at your income tax return and never touch it and tell you what you'll be audited on. I know from looking at returns what's wrong, what's out of place, where it's jacked up. I can tell you that just by looking at your return as being a former auditor for the IRS. I can tell you this is a red flag, that's a red flag out the gate. So make sure you pay attention to this section for S corporations because a lot of people miss it and they are being audited. And basically, like people say, like, I don't care I'm being audited. Well, you should care because now you're going to owe the IRS those funds, and you're not just owing those funds. Now you're owing penalties and interest from the date that the return was due. You hear me? I'll say that again. You're owing those penalties and interest from the date the return was due. So let's say you're audited and now you owe a balance due and the balance due is 5,000, but the IRS is patient. The IRS don't care. They could audit you for 3 years, depending on how egregious. 6, let it be fraud. They can audit you forever. So they can go back and let's say they now see you owed 5,000 once they make those adjustments, but now you owe 9,500 because they added the penalties and interest. I literally, Monisha and I, we both have a client right now that's pissed about their penalties and interest. They're like, we didn't even owe that much. You're right. You didn't owe that much initially, but the fact that we're still talking about your 2017 balance due in 2021, it's an issue and it becomes real expensive. I want to help you not have tax problems because when it's time to start solving tax problems, it becomes real expensive. Okay, so go ahead. Whoever is going to take over S Corporation, have your way.
You did an excellent start on this. I think that you
Sorry,
set
y'all
it
know
off.
I'm the
think,
drama.
I think one of the things, because I have a client and I have a couple of clients, and the one of the things that you need to know about an S Corp is that it is a pass through. So whatever profits your business makes, you have to then consider those when you do your personal tax returns. And so one of the things that I've seen that is not happening with people who have S Corps is they're making a lot of money in profit and nobody's telling them to pay estimated taxes. Nobody's saying you need to pay estimated taxes.
Wait, can I interject? Oh, please.
Go ahead.
And I promise I'm gonna be quiet the rest of this S Corporation presentation. Listen, I literally, what's today? Saturday? On Thursday, I literally have a client. They bring in over 6 figures. Black couple, awesome, doing amazing, buying up the city, rehabbing properties, flipping it, renting it, you name it and claim it. They're doing it, okay? Doing amazing. So I'm talking to them for a pre-offer assessment. And I look and I see, I'm like, okay, well, unfortunately, you don't qualify for an offer. You have over $500,000 in whatever. Girl, so I asked them, I was like the man, he honestly, like, he's pissed that he owes all these penalties and interest. It's a true story when I tell y'all, like, people are really mad about these penalties and interest. And he was like, we didn't even owe that much in taxes. I was like, you right. On 1 year, he owes $10,000 in penalties, $11,000 in penalties and interest alone, straight out the gate. The problem, so I said, well, why weren't you making your quarterly estimated tax payments? He said he's never heard of them. I said, wait, excuse me? What do you mean? He never knew. I told him, I said, so what's been going on? So he said, we've been filing extensions because we didn't have all our paperwork to file our return by the due date. I said, okay. I said, did you know that when you file your extensions, your taxes are still due by the original date of the return? He said he never knew that. He said to me, literally, the first time I'm ever hearing this is from you. I always thought that the extension to file, was due. He always thought his extension to file meant that also gave him an extension to pay. And I'm like, no, sir. The IRS still want their money April 15th of whatever year. Again, for the people, when I said at the very beginning, if you are a victim of the hurricanes and the tornadoes that recently happened, the IRS extended you to May 15th. So for you, your money isn't due until May 15th because the IRS extended your filing date. However, the money is due for the rest of us April 15th unless the IRS issues us a new date. It doesn't matter that you completed an extension. You must pay the IRS by that original due date, or the IRS starting April 16th starts assessing penalties and interest. Penalties and interest are killing people and businesses. Be very careful. Okay, I'm gonna be quiet. I'm done, for real.
But I think that just highlights what there's people out there that are doing tax returns and advising people and not giving them the information that they need. I have a client and she's gonna make 6 figures. And I've literally had to, because she does not want to pay taxes. She's like, I don't want to send them. So I've had to set up, I send her an email. I've got it on a reminder every quarter, pay estimated taxes. And I go in and change the amount. This is what it looks like you need to pay, because they'll get you with that too. You open yourself up to a lot of stuff when you don't pay the IRS like you're supposed to. So just the biggest thing is this S-Corp money. If you're the owner, if your business makes $1 million in profit, that's on you. And you've got to be able to make sure that you're doing what you need throughout the year to make sure you don't get caught up and you don't have a big, huge tax bill. Because again, if you don't have the money to pay it, then penalties and interest. And typically owners of S-Corps are employees. So you're an employee of that company. So you essentially get everything that your employees get. So, I guess if your business, something happens, you can actually collect unemployment. So that's one of the benefits of an S-Corp as well. And reasonable salary, again, reasonable salary. Please don't think that your company makes $1 million in profit and you're paying yourself $45,000 a year. That's a huge red flag.
I wanted to add as well, with the S Corps, the biggest difference between the amount of income tax that you pay as a sole proprietor versus the amount of income tax that you pay as an S Corp is really at that net profit level. So like Melinda is saying, the income passes through to the shareholder. However, remember when we were talking about paying your fair share of taxes as a sole proprietor, because you have to pay Social Security and Medicare taxes on that net income? Well, at the S Corp level, you're only paying Social Security and Medicare taxes on your reasonable salary. That net profit that passes through to from the S Corp to you, you're only paying income tax. And so those are the two differences. So you'll see that a lot, how people say S Corps are more reasonable, they save you a lot of money in taxes. That's true when you start reaching certain income levels, but at the end of the day, income tax is income tax, and you're always going to go owe income tax on income. So you won't be paying all 3 taxes on the S Corp net profits, but you will still have to pay Social Security and Medicare taxes on your salary, just not on the net profits that pass through from the business.
That's good. Did we open it up for questions? Sorry, I stepped away for 1 second. Does anyone have any questions? If so, please state your name and state your question.
I have a question. I'm not sure if it's the right question, but a friend of mine, I went to her birthday party.
Your name?
Oh, I'm sorry. My name's Trelawney.
Hey, hi. Go ahead.
Hey. So a friend of mine had a birthday party and I was eavesdropping on another conversation 2 ladies was having, and she was saying that I really messed up this past year. I don't know if she said I should have switched to an S Corp early or what it was, but she said that the error was in dipping into the funds as she pleased, as she wanted. But had she switched to something else, she could have avoided that whole big old $125 tax fee, tax penalty rather. And so now I was trying to figure out, I ain't had no business asking her because I ain't had no business listening. So now I'm asking, like, what was it? So it's like, you can dip into your business funds as you need to, if you're a what compared to a what, if that makes sense.
So I kind of get the line of questioning, but I wanted to be very clear when I made the explanation. You as a business owner can take cash out of your business checking account on whatever basis you want to, and it's still not doubly taxed. And so on the sole proprietor level, it's called owner's draws.
Yeah.
On the S Corp level, it's called shareholder distributions.
Okay.
And so at the S Corp level, it becomes a little bit more complex. So she may not have saved herself if she took out more money than what her actual basis was in the business. Now that gets really complicated, and that's definitely a conversation for another day. But ultimately, whether she took the money out of an S Corp or whether she took the money out of a sole proprietorship, she is getting taxed on the actual profits of the business. So that doesn't affect net profits. That affects something completely different, and you don't get to deduct that from the business. Just like if you got a loan from a family member or you put in money into your business from a second job, that money that you put into it is not taxable. It's not considered taxable income. Those are owner's contributions. And so you want to make sure that you're delineating between those two, because it can get a little tricky. So anytime that you start hearing tax advice from non-tax professionals, you want to take it with a grain of salt, because there's so many complexities that go into it. So
Got it. Thank you.
you're welcome. And thank you for joining. Trelawney's my friend. Any other questions?
How you doing? I had a question. My name is Gregory, and my question is basically, did I hear you correctly saying that you can be penalized if you don't pay your estimated tax every quarter?
Yes. Yes. If you don't pay it by the deadline, and they will have the schedules, and they see how much you owe on those specific dates. And if you do not record that you paid it on that date, because you pay your estimated taxes through the IRS's website, you will be penalized for the number of days it was late. So for example, the first quarter payment for the current year is always due April 15th. I don't think they've ever changed that date, even when they extended the actual filing tax deadline. It's always been April 15th. So if you owed $500 on April 15th and you waited until the next year to pay all of your taxes, that $500 has a penalty and interest rate that is being applied to it from April 15th until the day that you filed, that your taxes were due, or whenever you filed. I can't remember. One of y'all have to help me with the actual date. But you're talking about over 200 days of penalties and interest.
Oh, okay.
And that's why estimated taxes are so important, because that keeps you from having to pay that extra money at the end of the year. Because you think you just owe the $500, but you don't owe the $500. You owe the $500 plus if you wait.
Oh, okay. So estimated taxes is that quarterly thing, right? Like, you're not talking about the end of the year. Okay, just to be clear. All right, thank you very much.
Yeah, so technically speaking, our country is a pay as you go. And if you are paying as you go, truthfully, you're not going to owe taxes when you file your income tax return, or the amount that you owe is going to be super duper small. So when you are a employee, that's the reason why taxes are taken out of your paycheck. It's taken out of your paycheck because it's pay as you go. So as you're receiving your paycheck, your taxes are really being set aside. Those are also known as, which we don't relate to it that way, but basically those are our, as wage employees, those are estimated tax payments being set aside for our estimated tax liability when we file our income tax return. So once you're self-employed, you are responsible for making those payments. In our country, again, is the wonderful pay as you go. So I put in the comments the quarterly estimated tax payment due date. As Monisha said, it's April 15th. The next one is due June 15th, September 15th, and then January 15th. So as business owners, our next payment is due in less than 30 days. It's due January 15th for the fourth quarter of 2021. That's the date that we are supposed to pay our taxes, so that by the time we file our income tax return on April 15th, we don't show a balance due, or we show a balance due that's super duper small. If you want to get an idea of what you should be making for your quarterly estimated tax payment, go to your income tax return, look at your total tax liability. It's on your second page. It's at the very top. Look at the tax liability that you had. Divide that number by 4. That's going to tell you the payment amount. So let's say that number is 15,000, or let's say the number is 15,000 for your tax liability. Divide that by 4. So that means you're going to be paying $3,750 on April 15th, June 15th, September 15th, and January 15th of 2022, with your last payment being January 15th of January 2023. And then that's going to cover you for the 22 year. It would be a lot. That's why we be charging y'all, because it'd be a lot, child. Y'all get it though? Like, our goal today is to help it make sense.
It's a lot.
Like, and people be like, oh, I got a quick question. This is not a quick question. You think this is a quick question, but it's not. No, for real. I forgot his name, but am I making sense?
Gregory.
Did it make sense?
Yes, I understand. Thank you.
Okay, awesome sauce. Okay, so we ready to move on to the next slide. Any more questions about S Corp? 1, 2, 3, go. Okay, cool beans. All right, so we are now at the last slide, and it's partnerships. Yay! So as tax professionals, I hate a partnership personally. Does anybody else hate partnership returns? I do. Okay, so both of you ladies, all right. The CPA hates the partnership return as well. Look at that. Child. So really, when you want to set up a partnership, I encourage you to go to a tax attorney first. Okay? Go to a tax attorney to make sure that you're dotting all of your I's and crossing all of your T's. Because when you come to me, I'm just filing your tax return. And then you be hitting us with the questions. Baby, I don't know how you and your partner set this thing up. All I do is file the return. I don't know.
I don't know what y'all said.
Really, like, don't put me, like, y'all be in the drama. I don't want a part of y'all drama. I got my own drama going on. So whoever is gonna handle partnership return, go for it.
Yes, so K Renee is 100% on point. These are the most dramatic forms of business entities, because a lot of partnerships are formed on implication basis, meaning that, yes, I got a friend and we got this really great idea, and if we come together, we can make this work. We can, start making money. And at no point in time did anyone say, oh, okay, so this is how we're going to split down profits. This is what I expect you to do. This is what I'm going to do. Here's what I'm going to bring to the table. Here's what I expect you to bring to the table. And this is what we're going to do a few years down the line when we start making a lot of money, or we just don't make any money at all. All of those things need to be inside of a contract. I tell my clients, as soon as they start telling me that they want to form a partnership with one of their friends, go to an attorney. You need to set this up right from the beginning. I'll help you with all of the financial transactions and whatnot. We'll get all of that together, but you need to talk to an attorney first, because you will fall out quickly with a friend about your money. And I can't be involved in any of that. So just to spare everyone headaches, set it up correctly from the beginning. And so when it comes to partnerships, you can still be an LLC and be a partnership, and you'll indicate all of the registered agents and all of the everyone's role inside of the partnership when you file with your state. So someone can be the CFO, someone can be the CEO when you file with your state business regulatory division, and you can still be an LLC and be a partnership. Limited liability partnerships, those also occur, but those are more so on the professional side, like attorneys and CPAs, they're LLPs. But for the most part, you have general and then limited partnerships. So when it comes to general partnership, that means people are doing stuff in the partnership. I'm actually working, my other partner is working, and we're actually conducting business, we're operating the business. When it comes to limited partnerships, my contribution to the decision making of the business itself is limited based on the agreement. And so maybe I'm just, the investor in the business, and so I don't have any say so in the daily operations, but I still want to make money off of this. So I'm going to give you, $50,000, and then this is going to be my share of the partnership. But other than that, you can run the business how you see fit, as long as, you don't mess up my money. So those are the different types of partnerships. When it comes, I'm a little blind here. So, let's see.
You want me to
There
read
are
it?
no shields against personal liability. It was a few things. It's just the screen is a little bright. But that was one of the things that I also wanted to point out. There are no shields against personal liability. So even as an LLC, going back to that liability insurance and who is the owner of the business, when it comes to partnerships, is even more tricky because of what's called joint and several liability. So if you've never been sued before, you probably never heard this phrase, but it's definitely something that we learned in school, and I see it on Law and Order all the time. And what that means is that if someone sues your partnership, sues your business, and you're in a partnership, and they get awarded damages, it doesn't matter what your partnership share is. You could be 60-40, 30-70, 50-50. It doesn't matter. You're not going to have 50% of that liability. If you got the money, that claimant can come after you for 100% of the award damages. So joint and several liability, remember it, burn it into your brains, and make sure that you and your partner are legit. You have all of your bases covered, because lawsuits can really damage your business. Even in the event that you win, that you would still have some damages suffered because of just the publicity behind it. So be solid in all your business dealings. Business integrity is so important, but that's another conversation for another day. And then this is also another pass-through entity. So your partnership itself does not pay taxes. You would have your allocations split out, and then you and your partner would have your own share of whatever you agreed upon. You report that on your individual returns. And so if you have 40% of net profits that equaled $100,000 at the end of the year, you would pay income taxes on the 40%. You can be an employee of the business. It gets really tricky with that. Most of the time, you're just a general partner. And so you share the net profits, because once you start getting into employment and independent contractors for your business, there are a whole list of other obligations that you must meet by the IRS. And a lot of times, depending on how much you contribute to that business, they will disallow those classifications for your business, and they'll still just tax you on all the profits. So because you can't say that you're going to be a partner of the business and take those deductions and then try to, skate out on the taxes, that kind of teeters the line of tax evasion. So you want to always have those conversations with your accountants and your tax preparers before you start delving into those really convoluted fields, if that makes sense. Any questions?
I would just say that don't go into partnership with just anybody. That's the biggest rule of thumb is don't, y'all might be friends today, but if you got somebody that's a little shady and you don't maybe know that they're shady like they are, you might get yourself in a whole world of trouble. So just get the legal stuff in place before you even do anything. before you buy a business card, before you do anything, get that taken care of first.
Yes. And even with joint ventures, so some people create partnerships, some people create joint ventures, and those are just, we're going to do this thing one time. Structure it, set it up right from the beginning, because you do not want to be into making money and now all of a sudden we beefing about how we going to split this down.
Right, that's
People
not
get
the
killed
time.
over stuff like that.
Yeah, for sure. All right, any questions from anyone from the audience? I'm sorry, y'all, we've actually went over by 12 minutes. Any questions?
Hi, my name is Sayo. Can you hear me?
Yes, hi.
Hi, I just have a question. It might be off topic, not sure, but would you be able to, I guess, give advantages between having a trader tax status versus creating a business
That's
with an LLC?
Yeah, that's
And
a paid consultation type question.
oh, okay.
That you can reach out to one of us for. Right here today, we're talking about legal structures and versus a a tax structure. That's a completely different question that will not get addressed here. Sorry.
Okay, no problem. Thanks.
Okay, you're
I
welcome.
would strongly advise reaching out to Purpose and Passion Tax, because if you follow her, she is very, very good about making it known about her trading activities, and so she has a lot of experience in that. So I would
Yes.
definitely book with her, because
Yeah.
I don't like playing with my money like that. If I gamble $5 and lose it, I'm out. So I'm
Yeah.
definitely not the trader.
I would agree.
All right, cool beans. So if there's no questions, then we can go ahead and end this. I do ask that like you comment like if you learned something today, if you found value in this. And that's really all at the end of the day, that's what we want to do, provide you with value so that you have more of an idea regarding a tax structure versus a legal structure. And just going back to the LLC slide, you can be a limited liability company with a Schedule C, an 1120S, and a 1065. When you have a regular C corporation, you're already a separate entity. So you don't have to worry about getting an LLC for your 1120. You already separated. You already good. So don't worry about that. To answer questions, you can be a sole prop and be an LLC. You can be an 1120S and be an LLC. You can be a partnership and be an LLC. All of those things are possible. Let me look at the comments. All right, so basically, like we're done. I'm gonna go eat breakfast.
Y'all want to put in the comments your contact information, because I know I didn't get a chance to put a slide up. That was my bad.
My website is p-ptc.com. If you follow me on Facebook, then you'll be able to see it. And Miss Monisha Johnson, she actually is a CPA who specializes in taxation. That's very important for people to know. They're not the same thing. All CPAs do not specialize in taxes.
Another
Miss
good
Melody,
point.
are you a CPA as well?
I am not a CPA. I don't have a fancy title. I'm a registered preparer, and
Okay.
I'm actually working on my my MAC
Enrolled
in
agent?
accounting.
Oh, your background in
Awesome.
accounting. Awesome.
Yeah.
That is good. That is good. Okay. So we're going to go ahead and sign out. We thank you all for attending. Thank you for your time. Again, I hope and pray that you learned something today. And that was our goal, to help you to learn something. Okay. So everyone, enjoy your Saturday. Goodbye.
Bye, everyone. Thanks for
Bye.
attending.
Thank you.